Hello everyone, welcome back to Upside Down Data. Today I want to talk about Harmony, some of its recent price action, and what things I think it might need to remain competitive moving forward. If you like the content, remember to subscribe to the channel, give the video a like, and follow us on Twitter, where we put out regular updates about our risk indicators and more. So to set the stage for our discussion today, I want to start off with our risk indicator, the Upside Downside Potential Indicator, or UDPI, for 1. This is an indicator that if you're familiar with the channel, it indexes risk. So essentially, this is the price of one across time. These red zones, these high risk zones, are where selling one has been advantageous. It's been a smart move. And these green zones have been where buying one is advantageous, where it's a smart move. And the UDPI is a machine learning based model that's able to do this in real time. It's able to assess the price action of the asset and then give in real time its assessment of relative risk. And you can see that it does a good job of doing so. You know, it identified this top here as being the high risk zone. This green zone here as being a good buying zone in the summer. This going up to the all-time high is getting a bit risky up here in fall of last year. And now, the thing that probably jumped out on you is we're going back into these green zones that we've been in the past. And actually we can see this a bit more clearly if I just shift to showing the raw output of the model. So that's what this is here, UDPI level across time. And so what you can see is that we've kind of gone back down to the same kind of general risk zone that we were in during the summer, right? So we were in this kind of green zone here, which pre-staged this move to the upside. We're back in that zone now. Now, of course, the thing we have to watch for is, you know, I think some people might look at this and just say, oh, well, that means we're going right back up to the upside, right? Well, not so fast. I think that if the rest of the market remains bearish, like it is right now, Bitcoin's not really doing a whole lot, just kind of rage-bound. As long as the market isn't particularly bullish, I don't think one is going to go against the grain and break out to the upside. I think we're going to need some bullishness to return to the markets. Need Bitcoin to really make a break towards the upside and lead a rally back up out of kind of the abyss that we've been in ever since November for that to happen. But certainly we're at a risk level where putting in a big move to the upside is possible and is not implausible, right? We did that here. We set a new all-time high. So should we get some kind of a catalyst that can turn the market more bullish, I think it'd be totally reasonable to see another big move to the upside out of these levels. But again, with altcoins, one very much being included in that category, they tend to be the riskier end of the crypto space, and they heavily depend on the broader market sentiment. It's very difficult for an altcoin to defy gravity and move up in bearish times. There are only a few that manage to do one. For example, one of the major ones recently was Luna that did that on the back of its kind of unique setup with UST. But I digress. Long and short, I don't see one breaking out to the upside unless the market gets more bullish. But should that happen, this is the kind of stage that we've set before for big moves to the upside. But should we fail to do that, should the market remain bearish, I think it's very plausible we fall back to these lower levels that we've seen in the past, this kind of -5 zone that we bottomed out twice back here and over here in the past. So that's something that I'm looking for. And this is the long-term UDPI. This is reactive to moves that play out over months, so a longer-term time preference that it's looking at. We also have other time frames we look at with the UDPI. We have the medium term, which is reactive to moves that play out over weeks to months, and the short term, which is days to weeks, so even shorter in its preference. And all three are telling a similar story right now. So long-term, -2.22, medium, -1.54, and short-term, just above -3. And they're all thinking that there's more realistic upside than downside potential that's plausible for one right now. But there is still further room to the downside that we cannot rule out. It is very possible that we could see this downside be realized should the market remain bearish. And that's where, as I was mentioning before, these kind of lowest negative rungs on the ladder, kind of these lowest levels down here, could come back into play should that happen. But the good news, in a way, is that if the market returns to being bullish, if we see an explosion to the upside, one's got tons of room ahead of it. It's got tons of sky on top of it for it to go explode up into. And so we could see potentially one put a nice rally in that type of situation. So that's a risk assessment of one. I want to switch over now to the price chart just to talk about some other things that I'm thinking about, and then talk about some things that I think one might need kind of remain competitive in this current space that we're in, especially with alternative layer one blockchains. So this is where one is right now. One thing, at least in the short term, that's been a little bit concerning is that we've broken down below this fairly strong support level that we've been holding for quite a while. You know, you can see this level right around 11 cents, held as support all the way back here in September. We then wicked down to it in February, wicked down to it again in March, tested it for a couple of weeks back here earlier in April. We've now broken back down to the downside. And if we just look at the volume profile within this visible range, really coming out of the summer and up through, to see where is most of the volume transacted with one most recently, which you get this idea that, you know, oftentimes places with higher amounts of transactions, there are going to be more people with their cost bases built up in that area. So they tend to act as support and resistance zones. You can see we've kind of entered a void. We've kind of entered a gap here. And so really, if the market remains bearish, I would expect this kind of 8-cent down to 7-cent level to be the next place where we might really expect to potentially find some support, especially if there's still a number of people who have their cost bases around there, if they might want to step in to try to defend it. But then if we do reverse back up, then we're going to have to start breaking through these levels, which could start acting as resistance as we get back up to them. You know, anyone who is buying in down these levels might just choose this as an opportunity to exit at their cost basis instead of holding. And that's where I think we would need to see a pretty big impulsive bullish move to start seeing some of that upside potential get realized, slice through some of this resistance. And if we could break above, you know, this 20-cent, 18 to 20 cent level, then suddenly there's a lot less resistance that would sit above us. So those are just some levels that you can think about and watch. Now, obviously, we don't know exactly in here how many people have their cost bases at different points. You know, this is not on-chain data. This is just looking at the volume profile. But more likely than not, there's a decent amount of resistance in this range, but there could also be a decent amount of support down here. So really, I think it depends on what the market does short term, whether or not we go up and start battling resistance again, or if we have to go back down here and start trying to hold this as support before maybe being able to stage and move back up to the upside. Now, let's talk a little bit about these things that I'm watching that kind of more from a fundamental perspective, things that I'm watching to think about, you know, how one is going to fit itself into the current landscape with layer one blockchains. So I'm switching over here to DeFi Llama. This is just looking at the different chains and all the value that's locked on them. And we can see that Harmony is currently at 18 on this ranking. And the unfortunate thing more recently is in the past month, this is the 1 month change, Harmony has seen a pretty steep drawdown in the total value locked on DeFi projects in its ecosystem, down over 30%. And in some ways that makes sense because DeFi Kingdoms, I think as we all know, is kind of the flagship or has been the flagship decentralized app on Harmony. And then of course with DeFi Kingdoms branching out to the Avalanche ecosystem, that has likely been robbing some value from the Harmony side of the DeFi Kingdoms and now its own ecosystem, and value getting brought over to Avalanche. And of course, that's not good for Harmony because then there's less demand for Harmony. If people aren't needing one to pay for transaction fees and things like that, if they're moving over and using AVAX instead, that's demand that gets left at the door. And also, there's just the thing that in the kind of the eyes or the minds of a lot of investors, I think total value locked has been one thing that a lot of people have looked at to give relative value to one chain over another, or to kind of evaluate the worth of one versus the other. And so seeing value locked on a given chain is not really so great from an investment perspective either, because again, the idea being the more value that's locked on it, the more value that might be inherent to the chain. Although, of course, with the current DeFi landscape, so much of the money is kind of mercenary capital that's chasing the highest yields, that in some ways it's a little bit silly to care too much about minor fluctuations, total value locked. The thing that I'm more concerned about is that if DeFi Kingdoms is going to be kind of on the way out to some degree, and especially if the flow of money is going to be more out than in, then really I think one is going to need some other apps to step up and take its place. I think it's going to need some other big names, big things to come in, and not just these projects that are kind of these cross-chain things. I'm talking about other kind of Harmony native apps to come in and really start stepping in. Just to talk a little bit more about DeFi Kingdoms, the price of Jewel, the token for DeFi Kingdoms, has been more or less just bleeding for a while now. It had a decent pump going into March of this year, but now it's just kind of resuming its downtrend and just kind of resuming its bleed to the downside. And obviously that's also not ideal, because if an asset is just going to be trending downwards, it's less likely that people will be FOMOing into it, or people are going to be dumping money into it. Now, the one hopeful thing for Harmony is that last fall they had initiated and launched this $300 million fund, basically to try to bootstrap development on its network. Essentially, it's an incentive program to try to bring in developers into the Harmony ecosystem so that more use case can be developed on top of it. And so this is a thing where I think the hype from this announcement, we really saw that explode, back in here. This is right around when that announcement happened. We popped off, that ultimately probably gave us the fuel to go and set in this all-time high back here in October. But the hype is worn off, obviously, as it does with news like this. It gets priced in, you get that big kind of hype movement, and then it's more about, with these kind of things now, it's more about what actually comes out of this, right? And that's what I'm going to be looking for, because we already know that in some ways, in my opinion, I think one needs more native apps that do something kind of special and different that really grab people's attention. And potentially, if it's a DeFi project, for example, brings in a lot of total value locked, or just brings in a lot of usage if it's some other kind of application. I think Harmony's going to need some good things to come out of this. It'd be a real shame if $300 million goes into development and nothing really meaningful comes out of it. Because then, what's the benefit? What happened? Harmony would be in the same place. And in these more bearish times, these fundamental factors really start to matter more. And one of the things that I think matters a lot for these layer 1 chains like Harmony is the ecosystems they can build around them. So Harmony, of course, isn't small. It has a pretty decent number of just DeFi apps on it. So there is development that happens on it, but we'd like to see probably more. We'd like to see it get up and start being competitive with some of these top chains. So I think one of the things that you can say about Harmony is it has great tech underlying it. Certainly, it absolutely has great tech. It's very fast. It's cheap. But the problem is right now, there's, those are becoming a dime a dozen for cheap, high scalability, high throughput layer 1 chains. And obviously, people can kind of go back and forth about very specific technical aspects that they think might make one chain better than the other, like Harmony. But in terms of just the general population's use of these, they just care about throughput and speed. There's any number of other chains we can look at here, Near, Solana, Avalanche, Phantom, etc., that have similarly cheap, similarly scalable, have high throughput, etc., 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 have smart contract capability, list goes on. And so that's where I think really for something like Harmony, it has the tech down, but so does a ton of other chains. Now it needs to really build that defining ecosystem. And if it can do that, that could be something that could give it legs to stand on for the longer term. Something that gives it more intrinsic value that can't just be ripped away by these other competitors in this now it's becoming a pretty crowded market space for layer 1 chains. And then, of course, what we have to be watching for is, does that happen? And if it doesn't happen, we need to make sure to be clear-eyed about that. And anyone who's investing in Harmony needs to, in my opinion, not financial advice, obviously you should navigate your investments however you see fit, but in my opinion, it's best to be clear-eyed about the projects that you're investing in. Are they actually living up to the thesis that brought you in the first place, right? Because the thesis, things can sound great at the outset, and there can be a ton of promise on a chain. If the chain never delivers on that promise, then it can end up, ultimately not going where it should, and people end up losing a lot of money who are unable to kind of pivot out of that thesis. Now, again, not financial advice, and I'm not trying to spread FUD here. I don't think, I'm not seeing any reason why Harmony can't succeed. Just these are the things that I'm looking for. I think things need to come from these efforts. New development needs to happen. New kind of blockbuster apps need to be developed. And if that can happen, I think that Harmony could go and start realizing a lot of this upside potential. And one of the other things that we can see with one that's kind of a point in its corner is that over its lifespan, it's done decently against Ethereum. So I'm plotting the one versus ETH valuation, and there are a lot of layer 1 blockchains or alternative layer 1 blockchains that just are in a downtrend against ETH. That overall you would have just been better investing in ETH than in that alternative layer 1. one is not really one of those. It's what you might consider an oscillator against ETH. That it hasn't really been gaining ground against ETH over time, but it's been holding its ground across time. It's being relatively flat here. And so if this continues, then it's one of those things that it's not like you had an opportunity cost versus ETH, particularly by being in one instead of ETH, that overall, in the longer span has been about the same. If it can continue that, that would just be a pointless corner. But again, I think the way it will continue that is if it can build a kind of robust ecosystem of its own. All right, if you like the content, remember to subscribe to the channel, give the video a like, and follow us on Twitter. Put a lot of updates about our indicators and more over there.